following is an update and technical analysis on TSVT 2seventy Bio, a company of the healthcare sector in biotechnology based upon the daily interval in which I had mentioned 7 days ago within the community board, where TSVT had popped its inverse head and shoulder neckline with conviction on the daily interval with a minus 15 stop loss, 15% stop loss, and or momentum fueled false breakout overshoot back down below its neckline versus a 40% move to the upside if and when it retested its primary downtrend line support. Here is what it looked like initially, based upon a 522 trading upon 522 spot price in a well-defined, one of the most well-defined, most aesthetically pleasing inverse head and shoulder classic looking bottom with split of the neckline based upon multiple reactionary highs here, and that was a solidified big velocity breakout. And watch for potential backtest and or retest to scale in long, where the minus 15% stop losses resided below the neckline in the scaling out process if and when we were to attain and or be confronted with a momentum fueled overshoot back into the trading range, taking a whole bunch of long traders and or bull traders off to the headlines. And here's the update. Upon zooming you in right below the neckline, we had a beautiful, well-defined pullback initiating right amongst that key inflection point, giving you that great risk reward, long trade setup to the upside in the entirety of that move, knocking on its 200-day moving average as of now, tapping its resistance level. That was good for 30% in gains to the upside. And we are potentially confronting what would be a challenging big breakout continuation rally to the upside if and when we go on to retest a concealed primary downtrend line, call it multi-year price resistance, based upon the December 2021 major reactionary highs. And there is just a ton of reaction to help validate how crucial that inflection point really is if and when we go on to retest and re-challenge that level, which would be an additional 20% in gains to the upside. Make no mistake about it, this could be the potential line in the sand for any short sellers and or bear traders to go on, hone in on, to re-challenge the neckline on that previous reactionary high for a 24% crash to the downside. And that could occur. Make no mistake about it. That could be the end of this rally. If not, once again, long traders, bull traders want to see a complete infused green solidified continuation candle close back up above on Friday's to open and close to go on to re-challenge that key inflection point with additional unfilled gaps right up amongst the 898 range, and the complete unfilled and backfill of the gap up to the 948 price range would be another 50% in gains to the upside. And you have an additional 1180 price resistance with an unchecked gap up above for 90% in gains to the upside. The company and BMS have revealed plans for an upcoming FDA advisory committee gathering to deliberate on the supplemental biologics license application for Abecma, a therapy aimed at treating multiple myeloma, where the decision stems from encouraging phase 3 trial outcomes set for March 15th, 2024. This meeting will center on assessing the drug's effect on overall survival among patients who have undergone multiple prior treatments. Make no mistake about that, that could be the bullish catalyst for a much larger move to come in an unfilled gap where short squeeze or complete all-out short squeeze rally could ensue, panicking technical bear traders right back towards the emergency exit doors.